What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we did see selling across the indices, and we are starting to make the next leg lower. Where are we going from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down 1.77%, and on a closing price we did go down for the next leg lower. Remember, the strong support level we're paying attention to is 428, and below 428 we're looking at 420, and you can clearly see price action is getting very close to that support level now. So we are making the next leg lower, so the only question now is how low will we go before this next leg lower finds a bottom. So on SPY you'll want to pay very close attention to this level at 420, and below 420 we're more than likely coming down to close that gap at 411. These support levels are getting very far apart, but we're also seeing an increase in volatility, so you need to allow some wiggle room in the price action when volatility starts to increase. You can very clearly see the size of these candlesticks is increasing, so that is a great indication of increased volatility, as is the VIX closing above 30. So we are definitely in a very volatile market, and there's going to be plenty of opportunities for the bulls and bears alike, and there's still going to be plenty of traps in this market. So I continue to tell you to respect the downtrend, but you also need to respect strong support levels, because the price action can also be volatile in both directions, which does mean off of any of these levels we could still get strong counter trend rallies. So it's very obvious looking at the moving averages that we are in the bear trend, and we are getting a little oversold here. As you can tell, the 5 EMA is very negatively sloping, as is the 13 EMA. So the selling pressure is definitely picking up, and you can clearly see we are going down on nice volume. So this is definitely selling that you don't want to ignore. Now, I did say this before, and I'll just repeat myself. SPY below 420 and the triple Qs below 334 is going to be looking a lot more like we're going into a bear market this year. So if we start getting multiple consecutive closes below these strong support levels, you won't want to rule out the possibility that we're getting at least 30 more days of weakness, which means this prolonged period of weakness will go through the end of March. Now, all of that changes if we start to get a strong bounce off of this support level at SPY 420 and then come all the way back up here to close above SPY 450. Now, obviously, we'll have plenty of resistance on the way to getting back above SPY 450. So the most critical resistance levels to pay attention to will be right here at 428, 439, and our 20 simple moving average will be right around 442. If we can get back above our 20 simple moving average and then close back above 450, we more than likely saw the bottom, and we're going to get a very strong rally off of these lows. But you never want to get overly confident that we saw the bottom for sure, and the bullish confirmation isn't until we get all the way back above 450. So as you can tell, there's still plenty of risk, and you still need to navigate this volatility with very great risk management. Make sure you know your entries and exits, and make sure you're controlling your risk, because that is a huge range of uncertainty until we get the bullish breakout. And as you know, with a falling knife scenario, if you lose support, you're going to see a quick trip to the next leg lower. So be very cautious in this volatile market, and if you're not doing well in this volatile market, it's okay to just take a break from trading and come back when there's more clarity in the market. Anytime the VIX is above 20, it's going to be an increase in volatility. And if you notice that you're losing money during increased volatility periods, it's completely fine to take a break before you blow up your account. And remember that you have full control of that decision, so do what's best for you. Jumping over to the NASDAQ 100 triple Qs, you can see we were down 2.56% today. And just like on SPY, we're getting to very critical support levels. On the triple Qs, we did close below 334, but remember, anytime you break down through a critical level, you need to see a second day of follow through and a second day of confirmation. On the Stocks Channel Discord, I did mention getting below this level to take out a lot of those stop losses, and it's still possible we need to go a little bit lower to finish taking out those stops. You can clearly see there's very large head and shoulder patterns forming on the daily chart, so a lot of people are seeing these head and shoulders patterns, and they're setting their stop losses below the neckline, and that's the same exact scenario we saw on SPY at 428. So it's completely possible the market is going to create max pain, take out all of those stop losses, and force liquidate all of those people who have their stops in this zone, and then we could see a very sharp reversal and start coming back up to some of these resistance levels. That's just the truth about how the market works. It likes to hurt the most possible people, and we do know there's plenty of stop losses below these strong support levels. So on the triple Qs, now that we're below 334, you need to be a lot more cautious of the bear market scenario, but we are just one day below that level. Below 334, we're more than likely coming back down to 323 to fully close that gap. Now, there's no guarantee we have to go close the gap at 323, and if we are going down to close the gap, there's no guarantee that we need to do it now. So don't just hear there's a gap at 323 and think that's an easy short trade and that we're going there tomorrow. There's no guarantees and we're getting very oversold, and you can clearly see the price action is below the lower Bollinger Band, and we are seeing the moving averages starting to go exponentially to the downside. So we could easily bounce back here, and on the triple Qs that means we could come back up to 334, 341, and our 20 simple moving average at 352. Above 352 we are looking a lot more bullish, but we won't have bullish confirmation until we get all the way back above 370, or at least back above the 50 EMA, which is a moving target, and it will be somewhere around 364. So just respect this downtrend and make sure you have great risk management. And as you can tell, we're getting very close to finding where the bottom is going to be on this next leg lower, because we are starting to get a lot of elevated selling. Eventually, all of the sellers that want to sell will sell. We'll find the bottom. We'll know where that support level is because we'll see the strong bounce. We'll have that pivot point, and then we'll wait for bullish confirmation. So we're very close to knowing where this market's going. It's either going into a bear market or we're going to get the bullish breakout confirmation. And we should learn a lot about this market over the next 2 to 3 weeks. So if you're not sure what to do in this market, that's completely fine. Just wait 2 to 3 weeks, and then we should have confirmation that we're either going into a bear market or we're going to start seeing a lot more bullish developments. That should be unfolding over these next few weeks, so we'll know very soon. In the Dow Jones, we were down 1.34% today, and we did come back down to that very critical support level and fully close the gap at 331.6. So as you can tell, there's a common theme across the indices, and we did make those next legs lower. We've been talking about this for a few days now, and now we're finally here. So now the question is, how low are we going before we find the bottom and start getting that very strong bounce? So on the Dow Jones, if we start losing this support level, the next support level is down here at 324. Your resistance levels to break out above on the Dow Jones are at 338, 340, and then getting back above 347. The bullish breakout is back above the 50 EMA, which is currently sitting at 351, and then eventually taking out this high back here right around 358. So as you can tell, there is a lot of resistance, and with the strong bear trend, there's going to be plenty of bears shorting at resistance. So this is still going to be a very volatile and bumpy ride. You can see the Dow Jones is on a lot lower volume than the other indices, but we are still seeing the selling, so you need to respect the fact that we're in a downtrend. Also remember, if on Friday we're closing below 340 on a weekly chart, that does mean we have a confirmed double top look, which does mean we could be going a lot lower. So there's a lot to pay attention to in this very volatile market, and I would look at all three indices as a whole because we're clearly seeing a lot more weakness in the NASDAQ 100 triple Qs. On the Russell 2000, we were down 1.87% today, and we did get that second day in a row closing below 197. And remember, I told you below 197, we're coming back down to retest 191. So we're very close to retesting that level. It's only about $2 away. And if we break below that level, you're more than likely going to see the Russell 2000 going all the way down to 170 with support on the way there at 183. So this will be a very critical test of support at 191, so watch that level closely. Your bullish breakout levels will be back above 200 and then back above 212, and you shouldn't be getting bullish on the Russell 2000 until it can get back above 212. You also have resistance at 197 and right around 207 as well. On the ARKK ETF, we were down about 4% today, and we finally got down to that support level at $60. So this is going to be the ultimate test of whether or not that's going to be the bottom on this ETF. If we break below 60, we're more than likely going to start trending down towards 50, which is a very significant drop from this level. So you need to be very cautious. And if you're going long at this level, you need to have great risk management and be prepared if we lose support at $60 to see ARKK coming all the way down to 50. Resistance levels on the way up will be at 64, 69, and right around 77, and you really shouldn't be getting bullish until we can at least get back over the 50 EMA, which is currently sitting at $80. On the VIX, we were up over 7.6% today, and we finally see the VIX closing above 30, closing at 31, and we could clearly see the VIX on the daily chart is in a full bull trend. So remember, I told you if we lose support and we see the VIX getting into the elevated 30s, that is going to start signaling a bear market. So we do have to respect the fact that the bear scenario could be right around the corner, and we're getting very close to getting validation in the triple Qs. A bear market is defined by a 20% decline from the previous all-time high, and it's going to be a very prolonged period of weakness in the market. I can't see too many scenarios where the NASDAQ 100 is going into a bear market and SPY will not continue to decline as well. So respect the fact that the VIX is trading above 30, and you really can't get bullish on this market until the VIX can at least get back down below about 24 and start closing below 20. With the VIX above 30, be a lot more cautious and continue to expect a very volatile and whipsawing market. On Bitcoin, we're currently down 1.78%, and we continue to see weakness in Bitcoin, but we are holding up above this level right around 37,000. If we lose that support, we're coming back down to retest 35,000 and then back down to retest 30,000. Below 30,000, you'll see the Bitcoin bear market going all the way to 20,000, and that could be a very strong support level. You can't get bullish until we can get back above 46,000, or at least back above the 50 EMA, which is currently just under 42,000. We're in the full bear trend and we're clearly in a bear market, so respect the downtrend in Bitcoin. On NVIDIA stock, we were down 4.29% today, and we did close the gap at 228, and we continued lower to the support level right around 223. If we lose the support level at 223, we're very likely coming all the way back down to retest the low at 209. And if we lose that, we could be coming back down to 197 or 192. We did gain the full bear trend today, and we're clearly in a downtrend, so respect the fact that we're in a downtrend, and the bullish breakout is back above about 258. Above 258, NVIDIA will be looking a lot more bullish, and the next bullish breakout will be above 271. Resistance levels will be right around 236, 244, and 253. On Tesla stock, we were down 7% today, and we continue to see very similar stories across the market, with Tesla looking very weak and getting confirmation of the breakdown by closing below 792. Remember, I told you Tesla is likely going into a prolonged bear market below 827, and this is the second day in a row closing below that level. At this point, I wouldn't even consider getting bullish on Tesla until it can get a close back above the 50 EMA, which means you need to see Tesla getting all the way back above 940. You'll have resistance levels on the way there at 827, 860, and 900, and I wouldn't really be getting bullish until you can see Tesla breaking through those resistance levels. This is a very weak setup, a full bear trend, and we have a very clear double top, and we have broken down through the neckline. So we could be going a lot lower, and that does mean Tesla could be going all the way back down to 709, and below that, believe it or not, Tesla could be going back down to the high 590s and possibly low 600s. On Apple stock, we were down 2.59% today, and we did see Apple losing that support level at 162, and we're back down to our support trend line at 159. Below 162, we're very likely coming back down to 157 or 153, but we do have that support trend line right around 159. If we start to bounce from here, you have resistance at 162 and 168, and you can get a lot more bullish on Apple if it can get back above 168. Remember that Apple does move the market, so if we continue to lose support levels in Apple stock, you should continue to expect to see the indices going lower as well. In the financial sector, we were down 1.74% today, and we can clearly see the financial sector losing support levels and starting to gain a bear trend. The industrial sector was down 1.84% today, carrying on the oversold condition, clearly way below the lower Bollinger Band and still in a full bear trend. The healthcare sector was down 0.5% today, still retesting these lows of support, but also still in a bear trend. The energy sector was up 1.03% today, still below the 20 simple moving average and officially losing the bull trend, and we're sitting right on top of the support trend line. If we lose the support trend line, we could come all the way back down to close these two gaps. So jumping back over to the S&P 500, you can clearly see there's a lot of weakness in this market, and a lot of the sectors are rolling over except for the energy sector. So you need to respect this downtrend and watch these very critical support levels, and respect the fact that we could be right around the corner from entering a bear market. There's nothing particularly wrong with a bear market, and as an investor, you can continue to accumulate at lower levels. But as a trader, you need to be very cautious of volatility and make sure you have a very strict plan and you're sticking to it. And if you're starting to notice that you're getting wiped out from this volatility, you need to take a step back and reevaluate your risk management plan. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility in a brand new trading year, I think now is the best time to be a bank member. You can find out all of the information about Bank Trade Alerts and how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.